Thank you for tuning in and welcome back, team. In today's episode of Real Estate Facts, you'll learn about home buying anxiety and 5 steps to get peace of mind. My name is Andrew Finney, your real estate geek. I'm always here to help. If you need help finding a top agent where you live, or if you simply want to drop me a line to say hello, my contact info is below. If you haven't already done so, please go ahead and subscribe to this channel now and like this video. So let's go ahead and talk about home buying anxiety. How does this even happen to begin with? If you're a first-time home buyer, then it's generally because you just don't know what the process looks like, where to begin. You turn to online resources and you're doing the right thing right now. So pat yourself on the back. By watching this video and clicking on it, you're going to learn the next steps that you need to do to alleviate your home buying anxiety with 5 steps. Okay, so the next reason that it normally happens is simply just a lack of knowledge. So I want you to consider something. Whenever we have a lack of knowledge, it produces this overwhelming emotion in us called fear. And I want you to know that fear is nothing more than an acronym that means false evidence appearing real. If you keep that in mind, then you can not only succeed in your home buying endeavors, but anything in life. Whenever you see that feeling or when you feel that feeling of fear inside, just tell yourself it's just false evidence appearing real, and the best way to replace it is with comfort and confidence of knowledge. And knowledge is power. It really is. So let's go ahead and get into home buying anxiety and what you can do with step number 1 to gain peace of mind. Step number 1 is actually learning all you can about mortgages. Mortgages have really changed a lot in the recent years, from lenders and investors making adjustments reflecting on American households and the way that we live, right? So it's really important to note that like several adults in a household may be working and contributing to the household budget. So if there's several adults, they all might get approved together. If they're all approved together, it could really help them. But learning all you can about mortgage, in specific, to keep this as simple as possible. You have down payment assistance programs. You have zero down programs. You have programs that will assist you or provide grants from your state if there's those programs available in your state. And the best source of information for that will actually start talking about in point 2, which is a trusted real estate advisor to introduce you to a local loan officer. By talking to a local loan officer and learning all you can about your mortgage options, they will explain and share with you the information about the FHA loan, the USDA loan if it applies to your area, and also a VA loan and conventional loan. Depending on your circumstances, any 4 of those main loan types may be the best fit for you. And there's going to be different programs underneath each of those loan types. So for instance, FHA has down payment assistance. They have 3.5% down loans. VA loans are used for military personnel, active duty, or veterans, or retired, right? And they can be zero down loans for them. USDA is a Department of Agricultural loan type that is designed to help increase and assist middle income families in rural areas of the country, whereas conventional is kind of like just what most people think about when they think of a home loan, without realizing that you have all these other options. Whenever people think of a 20% down loan, they're normally thinking of a conventional loan. Here's the shocker. Conventional loans, there's loan programs depending on the lender that can actually help you with a down payment as little as 3% to even as low as 1% on a conventional loan. So that's why you want to talk with a local loan officer about your mortgage options to figure out which one is best for you. The second thing that you want to do is talk to a professional real estate agent. A trusted real estate agent, a top agent in your area, will be happy to introduce you to a local loan officer, answer the questions that you have about the home buying process so you have peace of mind, clarity, comfort, and confidence every step of the way. Now you might be wondering to yourself, okay Andrew, that's well and good. I understand the first 2 points. So when do I start this process? Now, I'm a big fan of saying that you can never start too early. I've actually had people that have reached out to me 2-3 years ago online or contacted me to help them buy a home, only to realize they were really early on in the process. And we've gone on now to actually help them buy their first home, and they're very happy in it. So that being said, it doesn't matter where you are in the process. If you start talking to a trusted real estate advisor now, then we're going to keep in touch with you and we're going to answer your questions and we're going to be there for you every step of the way. And when the time is right for you to get with a local loan officer, then we're going to put you in touch so you can get a loan pre-approval letter and go ahead and make sure that you're ready for the home buying process that's about to ensue. So generally, a lot of people should start reaching out to trusted real estate advisors anywhere between 6 months and 12 months before they intend to purchase. That way, you know everything, that they get everything ready, and if there's anything you need to do on the lending side of the house for paying off debts or lowering your credit card utilization rate, or if there's any other things that we need to work on, we can do that to help you achieve your goal of when you want to move into your new home in 6 to 12 months. So it's important to start that conversation early on, okay? So the point 3 here to easing homebuyer anxiety is actually exploring your down payment assistance options. Now, down payment assistance options are good for some and not good for others. There is a trade-off with down payment assistance. And the biggest trade-off is going to be in the form of your mortgage interest rate. That's how the program pays for itself, is by charging a higher interest rate to go ahead and assist you with being able to get a down payment assistance, or having all your down payment assistance ready to go so you don't have to pay it. Now, it's also important to note at this point, when you think of buying a house, there's 2 main things you need to plan for. Whether you're using down payment assistance or not, you need to be planning for buyer closing costs. Buyer closing costs are generally between 2% and 4% of a sales price of a home. So let's say the house that you're looking for right now, or the ideal price range of your new home, is $300,000. So if we use the $300,000 option in the case of just buyer closing costs, we're putting the down payment on the side, because in this topic we're talking about down payment assistance, right? So table the down payment onto one side of if you thought of a piece of paper and you wrote a line and you write down down payment on the upper left hand side, and on the right side you write down buyer closing costs. Put a line down the middle of it, right? Right now we're on the right side column where we're talking about buyer closing costs, 2% to 4% on average. Using the $300,000 sales price example, we take $300,000 and multiply it by 2%. What do you get? $6,000. At the high end of that, let's talk about $300,000 times 4%. What do you get? $12,000. Now, in practice, I normally see buyer closing costs averaging around 3%. So if you have $9,000 to $12,000 ready to go on the side for that $300,000 home for your buyer closing costs, then you're going to be in a very good position to be able to move forward on your new home. It is important to note that buyer closing costs, although they can be negotiated, is going to be highly subjective to the market conditions. If you're in a seller's market, don't expect your buyer closing cost. It's not that it's impossible, but it's highly, highly unlikely. And to better understand why that is, think like, even if you've never owned a home before, think like a home seller. If you had 5 offers come to you and one of them is asking you for buyer closing costs, so essentially asking you for this $9,000, and let's say another one's asking you for half of that, $4,500, but then you get an offer that's giving you everything that you want and not asking you for any buyer closing cost contributions, which offer would you choose? More than likely, you chose the one that was going to cost you this little out of pocket, right? It's only human nature. So if you understand it from that dynamic, you understand why it's important to have that money set aside, okay? So the 4th point to easing your home buying anxiety is to compare mortgage quotes. Now, when you compare mortgage quotes, it's important to understand that when you see things online, or you see it on television, or you hear it on the radio about how low somebody's rates are, that they're not always the case whenever it comes into applying it to your situations. There's so many variables when it comes into planning out what a mortgage interest rate is, from your credit score to your debt to income ratios to your income to the amount of home that you wish to purchase. So there's so many different factors that go into play with a rate. So the best thing that you can do is sometimes actually find 1 or 2 mortgage lenders that you're happy with and comfortable with, and compare some mortgage quotes and see what's going to be best for you. As you do that, I would strongly urge you to consider the strength of the loan officer that you're talking to. Were you comfortable talking to that loan officer? Do you feel that they answered your questions to the best of their ability, and most importantly to your satisfaction, so that you have peace of mind, comfort, and confidence moving forward with them? And the next thing is who has a track record of being able to perform and actually close on the loan? This is what comes up as a shocker to a lot of people, whether they're their first-time home buyer or actually a seasoned home buyer, is the fact that even though some of these loan officers, you would think that because they're a loan officer, they can close every single loan that on the pre-approval that they issue, right? It's just not the case. In fact, about 1/3 of all homes that are on the market, whether it's in a sales market, buyer's market, or a balanced market, will fall out of escrow. That's 1/3. That's 1 in 3 homes. 1 in 3 people putting their homes on the market, and 1 in 3 falling out of escrow. That's scary. So then I, as a real estate geek, trusted real estate advisor, I'm like, okay, well, why does this happen? And out of research and experience of the last 4.5 years in real estate, helping over 115 families, I have found the #1 reason that a family will drop out of escrow is actually due to financing issues, either a low appraisal or actual financing issues on behalf of the buyer, because unfortunately the loan officer didn't do their job when they said they issued them a pre-approval letter. And what does that mean to you? The loan officer doing their job, you will always know if they've done their job if they've collected your tax returns, your W-2s, your 2 months bank statements, 1 month pay stubs, or some, like if you have auto payments into your bank for your job, showing that. So, and they collected that information. If they've collected that information, now they're in a position to verify your income, your assets, your credit, and your employment. If they haven't verified it, even if you've given them all those documentations and they haven't verified it, then what happens is you're out there shopping, you're working with a trusted real estate advisor, and only to find out 21 days into an escrow, after you've already put your earnest money deposit down on this property and you're emotionally into this house, you find out that the loan officer might come back to you, oh, there was a mistake in underwriting, is what they would probably say. There wasn't a mistake in underwriting. It was just they didn't do the underwriting process up front, and they should have done it up front to make sure that you were good for whatever amount they said that you would be good for. So it's really important to know that. I know that's like a lot of details, so if you have questions about that, towards the end of this video, I'm going to pop up my contact information. As I mentioned at the front of this video, it's always down below as well. I'm happy to help you find a trusted real estate advisor that would know a great local loan officer to refer you to, so you can have those conversations. So the fifth thing is to consider your long-term cost. You know, your long-term cost of a home go far beyond just your principal, your interest, your property taxes, and your homeowner's insurance. They actually go into anticipating like what your monthly budget is going to be for your house. I like to call it like all said and done, or at the end of the day cost, right? At the end of the day cost is your principal, your interest, your property taxes, your homeowner's insurance, right? Which comprises your PITI. And write that down if you don't know what that is, because it's something that's going to come up frequently during your home buying process, okay? The other thing that you need to plan for is the HOA payment. Even though your HOA payment is separate and distinct from actually your PITI, right, which is your monthly mortgage, you need to plan it all into one budget category. As you're doing that as well, you want to be considering what are your monthly utilities going to look like from your gas, your electric, your water, your sewer, and your trash bills, right? So you can factor a monthly budget for your living expenses for just getting and just living in the home. That doesn't include things like gas for your car. It doesn't include things like the food that goes in our belly at the end of the day. It includes just what it costs to maintain that home. Now, there's a video that I made last year about how much home can you afford, and it's been pretty interesting because we've gotten feedback from different community members, and maybe you'd like to share your feedback and experiences doing this as well, with a very simple equation that I found to hold true here in Las Vegas like 99% of the time, if not 100. And some areas around the country, there's been people telling us about it, from the East Coast to the Northwest to the Northeast, you know, to the southwest parts of the country. They're saying they've tried this equation and it's holding true. So I'd urge you to also try it. This equation is so simple. All you're going to do is you're going to take the square foot of the home, you're going to multiply it by 0.8, so 0.8, right? And the result, so let's say that you had 2,000 square feet, you multiply it by 0.8, that equals 1,600. That 1,600 then is the dollar amount that your principal, your interest, your homeowner, your property taxes, homeowner's insurance, HOA, and your monthly utilities should be for that home. Now on the high side, I said factor for a plan of 1. So anywhere between 0.8 and 1 should be the actual amount that you could expect on a monthly ongoing budgetary basis to expect how much your home is going to cost to maintain for everything all in at the end of the day cost. So then when you're planning your budget, then all you have left over here are planning out your living expenses, from your food to your gas, and that's pretty much it. Your savings account, whatever it is you do for entertainment, right? Because you've already planned that it's going to be between $1,600 and $2,000 a month on a 2,000 square foot home. By thinking of it like that, you should ideally, that number should always be erred on the side of being a little bit higher than is realistic, so that if it's a little bit higher, and let's say there's $50 left over on that budget, then you can just put that $50 a month into a savings account. So that's a different topic altogether. But since this is about alleviating home buying anxiety, I hope that you have found this video useful. So now it's your turn to tell me how useful you found this video. What did you take out of this video? What is the most impactful and practical tip for you that you're going to put to use today? Was it number 1, learning all you can about mortgages? Was it the second point, that finding a trusted real estate advisor as early as 6 to 12 months before you intend to buy is a really, really smart idea? Or was it about considering your long-term costs and how to use a very simple equation to help you determine how much your new home will likely cost on a monthly basis? Tell us what your thoughts are in the comment section below. Now, if you haven't already done so, I'm going to ask you to do 3 things. Number 1, please go ahead and subscribe to this channel. Number 2, please like this video. And number 3, please share this video around with someone you know is going to be able to help. I'm going to put my contact information up right now. If you want to reach out to me just to say hi, or you have a question about this video or an idea for a new one, please let me know. I'd love to hear from you. And between now and next time, I'm wishing you and yours a lifetime full of love, wealth, abundance, and happiness. Thank you for watching, team. Enjoy an amazing day.